Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, March 12th, and we did have CPI in pre-market. And it did come in cooler than expected, still up, but cooler than expected. And SPY did open today with a gap up. And we did gap right up to that 30-minute 35 EMA and saw resistance there. We did come down, close this gap, and once we closed that gap, we tried again, but could not get above this 35 EMA. Now, looking back at the past 3 weeks, the 35 EMA has been a really strong resistance. So right here, we have all-time highs. This is back on February 19th. And then we gapped down. And then once we got this 35 EMA underneath the 30-minute 200 moving average, we saw the death cross on this time frame. That 35 EMA has been a really strong and steady resistance. It took us underneath the 1 week 35 EMA right here. Then it took us underneath the 200-day moving average right here, and then we saw a follow through lower. So huge resistance level. We were not able to get above it today, even with softer CPI. So that is really huge stuff. And tomorrow we have PPI in pre-market. So we'll see if that can get us above that level or if we'll see it as resistance again. So SPX over here, we also gapped up to the 35 EMA. And in this opening candle here, I did sell 56.65, 56.95 bear call spreads for a decent premium, and then I had 3 other orders in to average up if we did push higher, but we didn't even get above this 35 EMA. So that original spread here did close up 100%. So we took it up to the 35 EMA, got pushed out here, closed this gap, came up back to the 35 EMA, and we could not get above that level. We did close underneath the 35 EMA and we did close up. So this 35 EMA is in beast mode, and every time we come up to it, we see resistance. So SPY did close up today 0.53%, SPX up 0.49%, VIX came down 10% today. And as a spread trader, that 10% drop in VIX was amazing because as soon as I sold these spreads up here, they pretty much burnt up. And we did close within the implied move today. All right, so QQQ, we did open here with a gap up above the 35 EMA, but look at the momentum on that 35 EMA, completely flat across the trading range. 482, 487 bear call spreads would have paid 100% today. And I did check, there was definitely some decent premium up here, and then we just could not get above this 35 EMA. So after the gap up today, you could see the wick actually takes it almost right up to the top of the implied move and then immediately came back down. As soon as we closed that gap, we came back up and we could not get above this 35 EMA. QQQ did have a big update today, up 1.13%. VXN down 6.55%, and here we also did close within the implied move. And IWM, we did open here with a gap up, and again 35 EMA brought it back down. We did take that wick almost to this next level, this down gap, and then we came back down, closed the morning gap, tried again, could not get above the 35 EMA, closed underneath it. And IWM, look at this right here, not even one blue candle above this 35 EMA since we saw the cross down back here. And right here we did actually see a few blue candles, but when this 35 EMA came back up to the 30-minute 200 moving average, after that rejection here, not a single blue candle. 35 EMA has been the resistance level for the past 3 weeks here in IWM. So we did get above it, but not above this channel that goes around the 35 EMA. In this channel is where the candles actually print gray, and we could not get above that. And we got pulled back under and closed underneath the 35 EMA. IWM closed relatively flat today, up 0.17%. RVX down 7.16%. And we did close within the implied move here. Today in IWM, I did sell iron condor, so I did do 206, 207, and then 196, 194 on the downside, $1 wide up here, $2 wide down here, and that did close up 100% today. And lastly, we have DIA. So the Dow is a leading indicator of market health, and weakness in the Dow did precede this drawdown. It showed up there first. Weakness showed up in the Dow in 2008, and it has preceded other big moves, or at least been ahead of them. So today, the Dow was the only one that closed down. This week, we did drop down from the weekly 35 EMA. We actually gapped underneath it to start the week, and then we dropped underneath the 200-day moving average. And we also got a follow through with that 35 EMA getting underneath the 200-day moving average. This is a bearish signal, and the Dow is not showing strength in reclaiming this 200-day moving average. I would take this signal seriously. Obviously, as a day trader, that's not as important as if you're a long-term investor. So unless we have some really great PPI news tomorrow, I'm thinking that the Dow might be giving us a bigger signal. So keep an eye on this 35 EMA, on this 200-day moving average. There is just a little bit of upward momentum left here on this 200-day moving average. If we stay underneath it for much longer, it's going to start tilting downward, and that's when the real fun begins. All right, guys, that was a recap of today. I'm going to start working on tomorrow's trading ranges, and those are going to be out for you on TradingView in just a few hours. Always remember to have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.